there's something that is coming back, and that happens to be FHA and VA refinances, specifically the FHA streamlined refinances and the VA IRRRLs. These are both refinance loan program options from HUD and from the Department of Veteran Affairs. And it's a refinance option that, as the name implies, particularly on the FHA side, it's a streamlined process. So there I've got some bullet points of what's involved. With an FHA streamline, you're refinancing an existing FHA loan. Now, it's important that you have to meet the 210-day rule and 6 consecutive payments. What does that mean? Well, that means is if you've gotten an FHA loan recently, you have to have had the loan for at least 210 days, and you will have to have made the first 6 consecutive monthly payments. So you cannot start the process. You can't even apply for a streamline until you've met those timeline criteria. Part of the reason it's streamlined is because there's no income documentation. We don't have to get an appraisal, and there's no minimum credit scores. So that's all good things, and helps speed up the process and provides more homeowners the opportunity to refi into a lower rate. VA IRRRLs. Well, first of all, what is IRRRL? Well, it's interest rate reduction refinance loan. So obviously that's a mouthful. So we all in the industry, we call them VA IRRRLs. This is, again, a refinance of an existing VA loan. You do have to meet the same 210-day rule, as well as 6 consecutive monthly payments. As with an FHA streamline, no income documentation, no appraisal required, and in most cases, no minimum credit score. So again, a very simplified, streamlined process. These can be arranged and closed pretty quickly. Now, it's important to realize you can't just do this for the sake of doing it. There has to be a net tangible benefit is required. So that is part of the loan process, as we establish and determine if there is going to be a net tangible benefit to the borrower. And I've given you some examples here. On a fixed rate loan, the new rate has to be, generally speaking, at least 0.5% lower than what the homeowner currently has. If you're doing a term reduction, where maybe you're going from a 30-year loan to a 15-year loan, then the net tangible benefit test to be met requires that the payment for that shorter term not be more than $50 a month more than your existing loan payment on your longer term. A lot of cases, that's a little tough to meet, because when you go from 30-year loan to a 15-year loan, even though that 15-year loan may have 0.5% or maybe more, 0.75%, maybe even 1% lower rate, that doesn't always necessarily mean that that new payment at that shorter term is going to stay within that $50 limit over what you're paying currently. So that one can be a little tough to meet. And then the other one that I'm showing here is if you're going from an ARM, an FHA ARM, to a fixed, the new rate on the fixed has to be no higher than 2%. And of course, obviously what happens there is a homeowner who decides to go from an ARM to a fixed may very well and probably is going to be willing to accept a higher rate on the fixed, because it's more of a defensive move. They're looking to get out of that ARM loan, get into a fixed, because they want to avoid any future increases in that ARM interest rate. So again, those kinds of net tangible benefits have to be met. And so when I'm saying government loan refinancing is back, a couple of the lenders we deliver loans to are making a big push to encourage these kinds of transactions. I actually have one lending source that I'm using where we can offer FHA VA or FHA streamlines, VA IRRRLs with rates at 5.5 to 6.25. So, 210 or more days ago, or 9 months ago, 12 months ago, 15 months ago, if you did end up getting an FHA loan on a purchase or a VA loan on a purchase, and maybe your rates in the very high 6s, touching 7% or above, these streamlined opportunities are real and can give you a definite benefit. So if you or anyone has gotten an FHA purchase loan, VA purchase loan in the last, call it 9 to 15, 16 months, and if they have interest rates that are currently very high 6s into the low 7s, these streamlined and IRRRLs are a good opportunity right now. Give us a call, and we would be happy to give you some numbers for your particular